Warwick Lucas, that's a good afternoon to you. You're joining us this afternoon as well via Skype as we get to unpack this market movement. You're from Galileo Capital. Thank you. This market does seem to not necessarily take too kindly to any other shocks, particularly when you have US and China back at each other's throats again.
Yes, it's certainly a very sensitive market, Arabelle. I mean, for example, in the early run of results that we're seeing in the US, they are largely beating expectations. So I guess part of the issue, of course, is that there's quite a lot that's priced for some perfection after all that monetary stimulus, but that also means a market that has a lot more volatility embedded into it, and once again some more scope for things to go wrong.
Did you get any more confidence, though, from the earnings season out in the United States? I mean, Twitter went on to report some good numbers when it comes to the number of monetizable daily users, so users who can still see ads. I think that went up around 34%. So that figure was good in general. But overall, the US earnings season hasn't necessarily shot the lights out, though, has it?
Well, yeah, I think part of the issue is, of course, it's still we're quite early in it. I mean, we're only about 1/5 of the way, and your best numbers are always going to be the first, and of course, the tail end is probably going to be quite horrid. I think the other factor is that in terms of viewing markets, at times markets get quite guilty of very, shall we say, naive, almost coin flip type behavior, risk on, risk off, sector good, sector bad, etc. And I think some realization coming in that some more discriminatory kind of assessment necessary. So, for example, Netflix, yes, I mean, it might be great for people who are stuck at home under quarantine, etc. But at the end of the day, their customers are real people who have to hold down real jobs and have real consumer decisions to make, and it does have an impact there, and so the circle turns.
Yeah, indeed, the circle does turn. Let's turn our attention to the local market then. Yesterday, another rate cut, 25 basis points, 300 basis point cut this year so far. The governor, however, admitting, though, that the full impact of this rate cut hasn't, or of these rate cuts per se, haven't actually reached the full broader economy. So is this one going to perhaps change things any bit?
Not really. I think that the main point is that it provides a little bit of relief to those companies that are indebted. I mean, quite a lot of events, frankly, are a bit of an ambush. So it takes some pressure off. Certainly, SABC had room to cut with inflation down at 2.1%. But of course, whether inflation is going to stay down like that is a completely different story, and we're only going to find out a little bit later. Be that as it may, I think we're really looking at the bottom of the cycle as it was. I mean, there was a very close vote, 3-2. Perhaps that's it for SABC. I would have hoped that they could find a little bit more, but of course there always is some incipient inflation in the background.
Certainly will be, and I suppose that is the big question mark around that inflation number. All right, Implat's also expecting a 20% uptick when it comes to their year-end figures. We're seeing that platinum price rise to over $900 a fine ounce there. That has certainly helped them, despite in that fourth quarter seeing their production almost go down to zero.
Yes, I think the key with platinum is all of the production baskets, and that means both rhodium and palladium as well. So if we look, for example, at the first half of 2019 versus the first half of 2020, both rhodium and palladium were significantly better. I think it's important to realize that in the second half it might be a bit different. Palladium might hold a level. Rhodium is looking like it probably will be a lot worse. So second half on second half, I think for the rest of this year, in other words, I think we're going to see a much tougher story, especially since we've got some quite severe production challenges of producing in a COVID environment coming up now.
All right, very finally, very quickly as well, Cecil, another delay at Lake Charles for another month. That fire at their final unit certainly not helping them either. It's now 212 billion rand, or $12.7 billion odd is the estimation of the project costs there. The costs just keep racking up.
They do indeed, and the reaction from the Cecil price was less than one might have expected. I think especially since there's almost a sense of whenever there's bad news from Cecil of, oh no, not again. I think, though, to offset that, it is a relatively small extension. I mean, we basically got one extra month out of 9, and in the meantime, at least the oil price is, from Cecil's point of view, headed in the right direction. So I think all in all, they negative news, but nothing that's really going to shake things one way or the other too badly for Cecil.
Yeah, I suppose we've already seen all the shocks we possibly could see at Cecil. Thus far, maybe, is what the market is saying. Warwick, appreciate the time. Thank you so much for that. Warwick Lucas is from Galileo Capital, joining us this Friday, as usual, as we unpack that market.